Welcome to a channel that dives deep into the untold stories of global trade wars, with a special focus on the United States. Today's spotlight is on a brewing storm between two close neighbors, the US and Canada. Tensions have escalated since the implementation of aggressive tariff policies by former President Donald Trump, which shook even the most stable alliances. The breaking point? Canada has begun shifting its oil exports, not south to the US as usual, but eastward to Asia, favoring countries like China and India. This strategic pivot has sent shockwaves through America's energy market, exposing deep vulnerabilities in its economic and geopolitical positioning. But here's the real question. Is this a calculated long-term strategy from Canada to diversify its alliances and reduce dependence on the US? Or is it a sharp, retaliatory move in the high-stakes game of trade warfare? As the global energy map begins to redraw itself, the US may be facing more than just a diplomatic spat. It could be witnessing the erosion of its dominance in North American trade. Stay tuned. The fallout from Canada's oil export shift is hitting the US hard and fast. A sudden energy crisis is unfolding as gas prices spike by 30 cents per gallon across the Midwest, pushing up transportation and production costs nationwide. For an economy already walking a tightrope, this is a blow that reverberates from Main Street to Wall Street. Worse still, US refineries are scrambling. With 62% of imported oil in 2024 coming from Canada, the sudden supply crunch threatens to paralyze entire industries dependent on Canadian crude. On the macroeconomic front, warning lights are flashing. Inflation is surging. The Consumer Price Index has jumped between 4.8% and 8% in Q1 of 2025, bringing the specter of localized recession dangerously close. Meanwhile, Wall Street isn't immune. The Dow is tumbling, the S&P 500 is bleeding, and investors are on edge. This isn't just market turbulence, it's a strategic wake-up call. Like this video if you found it worth watching. The US reaction to Canada's energy pivot was swift and fiery. Former President Trump publicly accused Canada of taking advantage of the American market, threatening a dramatic retaliatory tariff hike, potentially up to 150%. This hardline rhetoric isn't just political theater. It signals a dangerous new escalation in trade tensions. The long-term risks are even more alarming. Trump's threats may accelerate global moves toward de-dollarization, especially as the BRICS bloc, Brazil, Russia, India, China, South Africa, increasingly shift their trade to local currencies. If that trend continues, the US dollar's dominance in global commerce could erode, diminishing America's leverage in international trade. Meanwhile, as Canada diversifies its energy partnerships, America faces a shrinking footprint in the global energy market. What began as a trade dispute now teeters on the edge of a geopolitical shift, with the US scrambling to maintain its economic stronghold. Is this strategy bold leadership or a reckless gamble? Canada is playing the long game, and it's playing it smart. Ottawa's strategy is clear: reduce reliance on the US and diversify its export markets. In the face of aggressive American tariffs, Canada is flipping the script, using its vast oil reserves not just as a commodity, but as a powerful negotiation chip. The message? If Washington wants to play tough, Canada can take its business elsewhere. Enter the BRICS alliance. By strengthening ties with nations like China and India, Canada is aligning itself with a rising global power bloc. Case in point, Chinese energy giant Rongpum recently established a Canadian office to secure direct oil deals with Suncor, signaling a seismic shift in trade relationships. This isn't just economic strategy, it's geopolitical chess. As the US doubles down on protectionism, Canada is quietly redrawing the map of global energy alliances. The world is watching. And Ottawa, it's making bold moves. Canada's bold pivot in energy exports brings short-term gains, but could carry long-term consequences. With oil exports redirected to Asia, Canadian revenues are surging. But beneath the surface, Ottawa's growing tension with Washington could backfire. Key sectors like lumber and agriculture, heavily reliant on US markets, may soon feel the heat. What starts as an energy coup could escalate into a broader economic backlash. Meanwhile, across the border, the pressure is building. American small businesses and farmers, already squeezed by rising fuel costs, are now bracing for even higher production expenses. From tractors to transportation, the price of doing business is climbing fast, and for everyday Americans, it's a punch to the wallet. Gas prices are up. Groceries are more expensive. The ripple effects of trade wars aren't just geopolitical, they're deeply personal. What began as a diplomatic tug-of-war is now a real-world crisis for millions. Both nations stand at a crossroads: continue down this tit-for-tat path, or find a way back to cooperation before the economic damage becomes irreversible. Canada's move to reroute oil exports has sent shockwaves through Washington. The U.S. now faces an energy crisis, with skyrocketing fuel prices and supply chain disruptions. Meanwhile, Canada emerges stronger, flexing its strategic independence and signaling it's no longer bound to one dominant trade partner. Looking ahead, the stakes are high. If the U.S. refuses to adjust course, trade tensions could spiral, pushing Canada closer to BRICS and redefining global economic alliances. It's a stark reminder: in today's interconnected world, no nation stands alone. This episode offers a sobering lesson about mutual reliance in global trade. Economic power isn't just about tariffs and threats, it's about trust and cooperation. So the question remains: will the U.S. rethink its approach to preserve long-standing partnerships, or watch its allies drift away in search of new alliances? Don't forget, like this video if you found it worth watching. Drop a comment with your thoughts on the U.S. and China. Subscribe so you never miss our next deep dive analysis.